Thank you. Sorry, just trying to get one or two things done here. Okay. Trying to put our device right. Go, come on, clean up here. Okay. Please, I want to be sure I'm heard. Can anybody confirm if you can hear me? Thank you to everyone that is connected. Can anyone confirm if they can hear me, please? Oh, thank you very much. Thank you very much. Ah, Prof. Good evening, sir. Good evening, sir. Good to have you here, sir. Thank you. Can also see and hear me. I hope you can hear me. Thank you. Zoom family, I think, just pardon me in case you can't see my face. There's a slight issue with the flex of this laptop that I've not fixed. This has been there for a while. I've not fixed it. But I will just want you, intermittently, I'll be confirming if you can still hear me. I want to welcome everybody once again to this wonderful session. This is the weekly webinar session from Meaningful Realtors, anchored by Mr. Meaningful. So, and for the past 2 weeks, in the last 2 weeks, we've had this interesting conversation where we started with the big shift, and well, let me just give a bit of a background that this session, Investing with Clarity, presented by Meaningful Realtors and anchored by Mr. Meaningful, well, pseudonym, Mr. Meaningful, Shegun Shonowo, for those who want to know me and call me by that name. Yeah, that's we've been trying to, what we try to do is to show investors, real estate investors, different opportunities that they can latch into using real estate. As I said earlier, my name is Shegun Shonowo. Before veering into real estate, I did over 2 decades in banking. I work with a partner who is a chartered accountant and equally has over 2 decades in financial services. So together we have a background of over 4 decades in financial analysis and advisory services, right? So what we try to do is to not just tell people buy this or buy that, try to make you see different opportunities in real estate that you can invest in. We are actually financial advisors using real estate as a vehicle. Last month we looked at an opportunity where you can invest in real estate for I'll call it for the very short term. You call it the buyback opportunity, where you invest a certain amount. That we actually call that series a definite entry, definite returns, definite exit investment, where you put in a particular amount, you get a guaranteed returns, minimum 30% over a 12-month period. You know when you're going in, you know when you're going to get out, when you're moving out, and you know when you are moving out. That was for last month. So since the beginning of the month of May, we've been looking at another opportunity that we call the big shift. And the big shift is nothing other than agro-real estate, right? Agro-real estate. I mentioned last week that, well, very soon we're going to run a series that we call the life stage real estate investment opportunities. That is, at every stage of life, the investment that is suitable for your stage of life. We're going to do that as a series sometimes in the future. But this evening we're continuing with our agro real estate series, which we call, today we're going to look at the money conversation. We're going to look at the money conversation, where we will talk about understanding returns, timelines, and investor expectation. Because the truth is that wealth grows differently when patience meets structure. There's always a difference. So once again, I say good evening and welcome. I'll say thank you for joining us on this agro-real estate series. And I mentioned that over the past 2 weeks, we've been going step by step. Week 1 was about the big shift, why productive land and agro-real estate are gaining attention, not just in Nigeria, on a global level. That is the truth. There's that big shift. And in week 2, we focused on structure, how agro-real estate investment models work, and why clarity matters. Now tonight, we want to discuss the part everybody wants to understand. Yeah, people have been telling me, Shegun, when are we starting? Show us the money. Let us see the money. Yeah, tonight we're going to have the money conversation. We're going to talk about the money conversation, and we're going to talk about understanding returns, timelines, and investor expectations. And honestly, this is where many investment conversations become emotional. When people start thinking, how much will I make? How long will it take? Is it worth it? When the return starts coming in? All these things, these are fair questions, But smart investing requires more than chasing numbers. It requires understanding. Remember I talked about that last week. Understanding is very, very important. Timing, structure, patience, expectations, sustainability. Because one major reason many people become frustrated with investment is this. Listen. Their expectations and the investment reality never aligned. You just say, come and make money, just put your money. What was the real? Did you try to understand the nitty-gritty of that stuff? Maybe not. And once expectations are wrong, even a good investment can feel disappointing. So tonight, we want to simplify the conversation. No hype, no exaggerated promises, just practical understanding. What is the big mistake that investors make? There's this very big mistake that investors make. Many people evaluate investment emotionally. If returns are not immediate, they start panicking. If growth takes time, they lose interest. If results are gradual, they assume nothing is happening. But real wealth systems often behave differently. The strongest investments are not always the fastest. Many people don't understand that. Sometimes they are the most consistent. Consistency, even in marketing, even in sales, it's consistency that will give, not how much that will give result. How much more when you now talk of investment. Think about agric itself. Nobody plants today and harvest tomorrow. No, because we're talking agro-real estate here. There's a process: planting, nurturing, growth, maturity before yield. That's the process. And honestly, wealth building often follows a similar pattern. Yet many people want immediate returns without long-term positioning. That mismatch creates unrealistic expectations, and this is why understanding timelines matter, because timing changes everything. Timing changes everything. When I know where my focus, like we said of the short-term investment that we mentioned last month, you have a defined period, right? But in agro-real estate, it's not, and that's why we clarify that was short term. For those who want to do long term, this is somewhere you need to look at. So let's talk about understanding investment timelines. Not all investment behave the same way. Some are naturally short term, medium term, while others are long term. Agro-real estate generally belongs more within the medium to long term category. We should know that, and that is not a weakness. That is structure. That's structure. Why? Because productive assets require time to mature. Productive assets, they require time to mature. They don't just mature. No. It's not today, put it today to get it tomorrow. Especially in plantation-based systems, like the ones we're going to talk about. Now, this is where many people misunderstand the conversation. They compare long-term productive investment with short-term speculative opportunities. That comparison is dangerous. Yeah, they're two different things, and that's why life stage of investment matters. Because the question should not only be how fast. The question should also be how sustainable. Is this process sustainable? Imagine planting a palm tree today and becoming angry next month that because it has not produced yet. How many of us know the story of the Chinese bamboo tree? Does anybody know here of the story of the Chinese bamboo tree? Can anybody just confirm, either in the chat box or you can unmute and tell us? Do you understand? Do you know the story of the Chinese bamboo tree? Can anybody just answer? Do you know the story of the Chinese bamboo tree? Can anybody respond? I'll appreciate if somebody can just that. No, you don't. Okay. Okay, the Chinese bamboo tree is one very interesting plant. You plant it year 1. At the end of year 1, you just see a shoot of it coming out of the ground. Year 2, maybe grow to about 8 feet off the ground. Year 3, maybe about 2 feet. Year 4, not until year 5. In year 5, the Chinese bamboo tree grows up to 100 feet. Within the 5th year, it grows from almost like 4 feet to 100 feet. And that is what you can imagine if that farmer who planted that bamboo tree, who did not know about the process, who did not know about what part of what we're talking about tonight, since that, what did I plant? Since last year, just this is what I'm saying. Year 2. But in the 5th year, the Chinese bamboo tree grows to as tall as 100 feet, from barely 3, 4, 5 feet up to year 4. And that is what agri investment is like. You see, that frustration would not mean the model is wrong. When you don't see things happening, you plant a palm tree today and you don't get anything next month. You don't seem to see anything next month. It simply means that expectations are disconnected from reality. Because they told you, and part of this investment process, the farmers, the developers who do it would always invite investors once in a while to come to farm and see what their money is doing. So if you are not patient enough, you might just lose interest and, before you know what's happening, you start venting, right? So let's go ahead. Honestly, this applies to many investments. Some opportunities reward speed, like what we discussed. Others reward patience. The key is understanding what game you are playing. Are you playing for the short term, the medium term, or the long term? So where does return typically come from? We talked about this last week. I'll just try to talk a bit more about, gloss over it briefly this week, right? In agro-real estate, returns can potentially come from different ways. One is land appreciation. I talked about that last week. If you didn't catch up with us last week, you can watch we upload this on YouTube. I'll share the YouTube link to last week's presentation before we go on this. I think that has been shared already, but if you didn't get it, you can just reach out to me. I can share that with you. The value comes from land appreciation. Strategic land appreciation over time due to development, infrastructure, population expansion, economic activity. That's one layer. The other way of getting returns in agro yield potentially is, from agro real estate is agricultural yield, right? Where you start planting, the crop production, the plantation systems, the processing ecosystem, agricultural value chain. That is another way that you make money from agro real estate. The land that you buy, that you put. Also, long-term asset strength. Some investors are also, excuse me. Long-term asset strength. Some investors also value agro-real estate because it combines real asset, productive potential. For those who followed us last week, you remember I mentioned current VGC, that many years ago, that same location used to be a palm plantation. And the original owners who are still likely to be part of the owners today are still reaping from that investment. So it's in the long term, your asset gains strength. And because population is increasing, food demand also increases. Another way to get money from agro real estate is structured participation models, and that's part of what we are talking about tonight. Where you are not directly involved in farming, you put in your money, somebody works on it, and you get returns on your investment. Now, one model that we want to talk about tonight on this agro real estate is the intercropping advantage. Because truly, when you invest in real estate, like we have clarified, you invest not for the short term but for the long term. However, there are, for instance, if you do palm plantation, the developers will make you understand that you don't expect any returns on your investment until the 4th year, because the palm tree don't start fruiting until the 3rd year that you start getting a bit of it, but real returns come from the 4th year. Some even tell you conservatively that you don't get returns until the 6th Yeah. But some other developers are now becoming dynamic. They are now becoming creative with the agro-real estate investment. And that is it is that dynamism that we want to share with you tonight. That dynamism is what is called the intercropping advantage. Can we just type that if you're with me? Intercropping advantage. Can we type that, or you're mute? Can we say intercropping advantage? Can somebody type that in the chat box? Intercropping advantage.
Intercropping advantage.
Thank you very much. Thank you very much, Oduyiga. Thank you. Thank you. I'm happy that somebody can hear me. Intercropping advantage. You see, this is gradually becoming popular. Instead of relying only on one long-term crop, some plantation systems combine long-term crop and faster yielding crop. That is what is called intercropping advantage. An example where you have oil palm and plantain. That's one example. Another example where you have rubber, which is a long-term crop, and plantain, that is a short-term crop. Not everybody is doing this. And that is one of the beautiful reasons why you should connect with our own series, where we show you opportunities that investors are already creating in this space. Only very few developers are doing this, and some people are coming in quietly. They are coming in quietly, and before you know what's happening, well, only few people like you who are opportune to connect with meaningful realtors will know that where is that opportunity. Because with intercropping advantage, let's continue. Don't let me let the cat out of the bag. This changes the investment psychology completely. Because while oil palm may take about 4 years to mature, which I've already said, rubber may take about 6 years. But the thing about it is that rubber has a longer productive lifespan than oil palm. Now, what happens? Plantain can begin producing much earlier, maximum a period of 1 year. So the investor is not sitting idle, emotionally waiting endlessly for returns. That is strategic structuring. Hope we had that strategic structuring. Many investment failures happen because investors underestimate the waiting time. True. I was going to get committed to the 6 year. How many it doesn't matter 6 years, but when you now 1 year, no returns. So you start getting emotional that people who did other investment, they're already getting returns on their money. That is agreed for you, but challenges start coming because the waiting time is underestimated, and they overestimate early returns. Intercropping brings a balance between that waiting period and the early returns, because it creates early cash flow potential, number one. It creates medium-term stability, and it creates long-term asset value. Can we say that? Can you follow me with that? Early cash flow potential, medium-term stability, and long-term asset value. That is a more mature wealth building structure. Remember, tonight we are talking about agro-real estate. We are having the money conversation, and I hope you can see where I want to believe we are making sense. And I'm going to give some scenarios, some simulations. I call it simulations, just estimations of, okay, this is what you're likely to put in, this is what you're likely to get, right? Let's start now with the oil palm and plantain conservative projection. Now, scenario one, we're looking at the scenario where you have oil palm and plantain. The estimated setup is approximately 60 oil palm trees per acre and approximately 450 plantain trees. And the estimated entry cost is about 3.5 million naira, all inclusive. If you're going to do this between 3.5 and 4 million naira. So after year one, plantain begins early yield cycle after year one, and the conservative gross return on that, the estimated return is about between 1 million to 1.2 million after year one. Because already on your 1 acre you have 450 plantain trees. For those who have an idea about farming, you can just try to estimate what you will get from 450 plantain trees, plus or minus. So at the end of year one, you start making returns on your investment between 1 million, 1.2, it can be a little more than that, right? So if you invested 4 million and from year one you start getting that returns, for an investment that is going to last nothing less than 30 years, yes, because your palm tree is going to extend into well over 20 years. At this stage, the focus is mainly on early plantain harvest cycles. Farm operations are still stabilizing. Yield consistency is still developing. By year 2, year 3, plantain productivity stabilizes. Possible annual return range now increases to about 1.5 million to 1.7 million, and it can even go as high as 2 million naira. At this point, farm management system has become more efficient. Harvest cycles become more predictable. Operational learning improves output quantity. Right? So then when you get to year 4, year 5, oil palm begins contributing meaningfully. Now the structure becomes more interesting. Instead of relying mainly on plantain, palm yields start entering the question. Right? So at that point, the plantain naturally will be winding down and the palm is coming up. So long-term plantain economics begin activated. At that period, your possible annual returns will now be going between 2.5 million, 3 million, 3.5 million. After year 3, all because of the benefit of intercropping, all because you listen to meaningful realtors and we are able to link you with a developer that has this model running. So after year 4, year 5, you can continue with the projection. Depending on yield quality, all these are depending on yield quality, varying commodity prices, management efficiency, and processing opportunities. So they're not as if it's not as if they are cast in brass. Remember, I told you that these are just projections, but it is based on what you can get if you invest with a developer that has the intercropping model. Also, notice something important. This is no longer quick money. This becomes asset-backed recurring productivity. Asset-backed recurring productivity. Long-term agricultural cash flow and a maturing wealth system. Now, we don't want, because of time, we don't want to go, we don't want to do a similar thing. Let me just mention, gloss quickly over that. What we did earlier with oil palm. You can also do the same simulation with rubber and plantation and palm plantain and plantain rather. With rubber and plantain, you can equally, the developer will also have option of saying, okay, we're intercropping rubber that has a longer period, except that the entry cost for rubber is higher than that for oil palm. So as you go along as well, after year 1, after year 2, after year 3, in year 4 and year 5, rubber does not start producing until like year 6. Right? So in year 4 and year 5, there may not be return on your rubber, but by year 6, you'll be getting almost twice what you'll be getting from oil palm. So either ways, what this is simply telling you is that this is another model that you can get into agro-real estate. This is another model that you can, if you can find a developer that has this model. I'm not saying you necessarily have to do it through meaningful realtors or through a developer that we know that is doing this. All we're saying is that this is, look out for a developer that is doing this. If you want to go in, okay, what if we do this? Can you, or do you have this or this model as well? Find out. That is where structure comes in. Now we want to talk about beyond farming. There's a bigger ecosystem. Beyond farming, there's a bigger ecosystem. And what makes these models increasingly attractive is that many modern agro-real estate systems are becoming complete ecosystems. Beyond farming alone, some projects now integrate livestock, fish farming, processing hubs, resort experiences, wellness environment, ecotourism concept. A number of things that you can do within that agro-real estate environment. And this creates broader economic activity around the investment. And honestly, that really matters because investors are no longer looking for profit. Many are looking for stability. They are looking for ownership. You still own your land. They are looking for legacy, something that you can live there for generations. They are looking for peace of mind and alternative lifestyle positioning. These are some of the things that investors are looking out for. I hope you have them. I'm very sure those on this call will be interested in doing this. So that emotional layer is becoming increasingly valuable globally, especially among professionals and diaspora investors who are seeking wealth preservation, calmer lifestyles, alternative retirement positioning. Let me just whisper to you, that is my own retirement plan. True. That is what I'm looking at. So when we talk about the difference between investors and speculators, there's a difference between speculating and being an investor. Speculators often ask, how fast can I cash out? Investors ask, what is this asset becoming over time. Note that speculation, how fast can I cash out? Investors are thinking, what will become of this asset over time? That difference is very powerful because wealth is often built through patience attached to quality assets, not constant emotional movement. Yeah, many people only learn this after painful experiences, and true, many people are doing it. I mean, I've had my own painful experiences. I want to be honest with you. I've had my own painful experiences where I put money into investment and expectations did not meet what the expectation and reality did not align. You know, but smart investors are learning early. What to do now? What I'll call an investor reality check. Let's balance this conversation properly. Let's balance it. Even with structured agri systems, agri still carries its own risk. Commodity prices fluctuate. What we're doing now is a reality check. Commodity prices fluctuate, weather conditions matter, management quality matters, and timelines can shift. That is reality. That is reality. And honestly, realistic expectations create better emotional stability when we know that, okay, we've seen it, okay, this is what exactly happened. And honestly, that's the truth, because when people expect perfection, every normal challenge feels like a failure. When people, and what is perfect? Nothing. So clarity reduces panic. This is one reason education matters before investment, not after, like the one we are getting this evening. We are telling you as it is. We are giving you a moderate projection, and we are telling you that reality is also very important. And now there is also the emotional wealth perspective. Many people think wealth is only about making money. No. Real wealth also involves stability, predictability, asset preservation, long-term positioning, peace of mind. Peace of mind. That changes how mature investors think. Sometimes the best investors are not the loudest. They are simply strategic, structured, and sustainable. And honestly, this is why many experienced investors usually shift from excitement-driven decisions to system-driven decisions, which are the kind of opportunities that we are opening up to you. Because peace matters, especially after people have experienced losses before. So as we close down on this conversation, imagine two people planting trees. The first person checks the ground every day. Checking, frustrated. Why is nothing happening yet? Remember the story of the Chinese bamboo tree. Eventually, impatience pushes him away. The second person understands something important. Growth is happening on the ground, even before results become visible. Please, if you don't remember anything this night, remember the Chinese bamboo tree. So, the other person stays patient, he stays consistent, he understands timing. Years later, one person has frustration, the other person has harvest. Which one do you want to be? There's a difference, and the difference matters, because investing is not only financial, it is equally psychological. Peace of mind. Sometimes the greatest advantage is not money, it is patience guided by understanding. On a final note, if tonight's session has been helpful to you and reshape how you think about returns and timelines, stay connected for week 4, where we'll get actual things. We'll get real life, and you can even talk to me behind the scene, right? We can talk offline, where you get information. And if you have questions, you can equally drop it on this chat or drop it on my number. You can reach me, call me up on +234 703 091 0000. I'll expect to hear from you. I'll give you, can stay connected for week 4, where you get more information, or request the agro investment evaluation checklist. We can let you know what you look out for. You can start evaluating opportunities beyond the hype and focus more on structure and sustainability. Very important. Please, because strong wealth systems are rarely built emotionally, they are built intentionally. I want to say a big thanks once again to all those that are connected tonight. I hope we have made some meaning from this conversation tonight. Right? Yeah, Abiba is asking, which company does this intercropping project? Well, like I said, you can reach out to me. We are not here to market any particular company. What we have only done here as Meaningful Realtors is to let you know that there's a big shift, and you need to understand that there's the structure around it while looking out for the money conversation that we have told you tonight. Reach out to me. I'll give you hints of which companies can. Yes, I have some companies that I'm relating with, and I'm not saying you must relate with them. Please don't get me wrong. What we are simply telling you that invest with clarity. We have only come to show you opportunities that you can invest in that can make you good returns over time, reliable returns over time. And I'm very, very sure that you would not want to miss out on these opportunities that we are showing to you. Once again, before we go tonight, my name is Mr. Meaningful. If it doesn't make meaning, I'm not interested. I only get involved in things that are meaningful. Thank you once again for connecting. I say a big thank you. From Trevor, thank you. Julie, Galaxy, thank you. Ilori KK, thank you. Tishabidemi, thank you very much. Prof, sir, I'm so very grateful. Thanks for connecting. Elizabeth, well, thank you. My boss, Madam Abiba, thank you very much. My pastor, Mr. Diagbe, thank you very much. Caesar himself, I appreciate you. Thanks for connecting. Auntie Shadi, thanks. Oh, my big brother, thank you very much. I always love you. Thanks for your support. Thanks for being there all the time. My principal, sir, thank you very much. Adesui, Adebisi, thank you. John Anulubumi Zebre, thanks. Big thanks to everyone for connecting. Please, if this made any meaning to you, try to connect to week 4, where you'll get more information on how to close deals and how to gain to leverage on the big shift of real estate investment in agro-real estate. Thank you and good night. I will appreciate if you can reach out to me. I always want to keep this as close, as quietly as as timely as possible. Next week we can probably have a question and answer session. Maybe next week we'll have a question and answer session where we can talk more. I'll get your questions. Thank you very much. Good night, everybody. See you next week. I remain yours, Mr. Meaningful. Bye for now.
Thank you.
Thank you.
Bye.
Bye.